Welcome to 3 and 3. My name is Jason Weaver. Today we're going to be talking about federal taper versus raising interest rates, thematic investing, and deflationary forces. So federal taper versus raising interest rates. So in the December meeting, the Federal Reserve agreed to accelerate their tapering. And also they committed to potentially raising rates a couple times in 2022. So taper is the gradual trimming of Treasury securities and also high-grade mortgage-backed securities. Whereas raising rates is the Fed actually raising the overnight rate, which currently is at 0 to 0.25% interest. So as we look to the Goldman Sachs forecast in 2021, you can see that we're actually expecting a subdued taper into the second quarter of 2022 and the first rate hike to actually occur in 2023. So we've pushed that forward, whereas now we're expecting the taper to end by the first quarter of 2022 and the first rate hike to occur potentially in July of 22 and subsequently 2 rate hikes to follow. So thematic investing, we're going to look at healthcare innovation and disruption, 5G, machine learning, and artificial intelligence. So healthcare innovation, you had advanced therapies, which is gene therapy, precision medicines, medical tech, which is robotics, connected healthcare, healthcare services, which is telehealth and healthcare management. We have digital healthcare, which is biosensors and trackers, and also well-being, which is body and fitness, sight and hearing. So the progression of 5G started again with 1G back in the 80s with analog voice. We moved into 2G, which is digital voice, 3G, which is mobile broadband, 4G, which is faster, better 3G, and now we're at 5G, which is the connected devices. And this is what we need for autonomous cars to actually work efficiently. So 5G penetration by country is the most currently in China and South Korea, whereas the US has a lot of work to go at currently 6%. So artificial intelligence refers to computer systems that can act like humans and think and do that deep learning process. And the AI market in 2020 was $30 billion. That's expected to grow by 2026 to $300 billion. That's over a 35% compound rate of return. Deflationary forces. So technology is advancing and actually creating deflation in many aspects of our economy. And price inflation slows when we increase production and we can meet actually demand. As more industries adopt new technologies, we'll actually see a lot of these deflationary forces working into the future. We can compare the digital price index versus the CPI, which is the consumer price index. And looking at the digital price index, which is over 100 million goods, you can see the deflationary forces of actually that index versus the consumer price index, which has been elevated and more recently running at over 6% because of the current inflation that we're going through. Thank you for joining us for 3 and 3.